Giordano here at the 12th Annual Institutional Texas Forum with Markets Group, here with J. Paul Knight. Welcome, Jay.
Hey, glad to be here. Been really enjoying this symposium so far. Have a lot of great folks to learn their perspectives on, so it's been an awesome event.
Now, you're with the Employees Retirement System of Texas. What's your title there?
So I'm senior market strategist. Have a lot to do with macroeconomic understanding, helping my organization look at what's going on in the world, and also tactical asset allocation.
Loved your wisdom on the equities panel, which you just kind of came off of. Can you tell me, is this a growth or a value market that we've got going on?
I still feel pretty confident that we're in a growth environment for a while longer. I believe the United States is going to continue to dominate as far as the AI story is still intact, and that the productivity improvement that we're seeing in the United States, our employment situation is all still valid. We had a little bit of underperformance in the US earlier this year, but right now we're starting to reassert ourselves. Earnings growth is still favoring the US, and I think this is the place to continue to invest for a while longer.
And what do you see coming around the corner that you're keeping an eye on?
So the things that I'm really paying a lot of attention to right now is a potential return of inflation. And when I say that, it's not the tariffs right now that I'm really concerned about, because I think that's a step change for right now. So Trump's tariffs aren't the big issue. It says that when we start to lower the Fed funds rate and maybe potentially drop below the neutral rate, that could be inflationary later on. So maybe late 26, somewhere around there, maybe after the elections next year, it'll start to become a little bit more of a problem. And so the Fed will be raising rates again into 27. So I think that's something to worry about, both the discount rate going up. And then probably my other concern would be uh, AI CapEx. I still believe it's happening. It's a good thing, but it may taper off when we start to realize maybe we don't need quite as much as being done so far, and there's other creative things are happening. So one of the things I mentioned on the panel was I was reading some other smart people what they were saying about tech, and learning that we may see some restructuring on how AI models work, so not so much processing power is needed. And if that's done, then we may have actually overbuilt and may see a tapering down of capex spending, which has been a big driver of economic activity. So I think that's something to really watch to see of the evolution of AI, where maybe not quite as much hardware is needed, and that we will see some slowdown on that level, but not quite yet. But we need to be looking for that.
Fascinating. So, okay, let's say these factors come into play. Let's start with inflation. What are you going to kind of pull back on your growth stocks in that situation?
I think that's something to watch out for if inflation becomes a problem, because it'll be a lot about the Fed increasing rates then. And Will from Amova, who was on the panel with me, was talking about how liquidity, if liquidity comes out of the stock market, and what I call the punch bowl, it's frequently referred to as the punch bowl. If the Fed takes away the punch bowl, that could definitely make stocks struggle more, and those high value multiples could be a problem. And the earnings, expected earnings and revenue, may not materialize quite to the level that we're expecting right now. So that could be a slowdown, could cause some shift, and people will be looking for investments in things that may be at a better multiple.
Last question. How's the conference going for you so far?
This is excellent. I really recommend folks consider participating in the Market Group event. You meet some incredible professionals, the diverse panels that are here covering private equity, high yield, various aspects of things that asset allocators would care a lot about in their job. I think you're going to learn a lot in a event like this, and I'd recommend others to come. And I've really enjoyed being here.
Fantastic. Thank you so much.
Glad to do it. Thank you.